Hey everybody, it's Kenny Tate with Keller Williams Realty, and I wanted to bring you some information today about what's going on currently in the Tulsa marketplace, because I know there's a ton of information out there. We're hearing all kinds of national headlines and things like that, and that's all great, but it doesn't really necessarily apply to the Tulsa area. And what I want you to have is a little bit of clarity when you're trying to make real estate decisions this spring. So I'm going to try to interpret some of this data for you to help you make some informed decisions. This is fresh from the Tulsa Association of Realtors. You can see that in 2023, our February, we kind of got tanked a little bit. We ended up with 888 closed listings off of 1,107 in 2022. So the market's down almost 20% in closed units. We're off 16% in pending units. The interesting thing is we still continue to fight an inventory struggle. We're down 6% in terms of listings taken, and that's allowed the market to kind of elevate the floor underneath the price and kind of support it a little bit. But one thing that is kind of concerning to me is that our 12-month rolling average of how many houses are being pulled out of the market on a monthly basis is about 1,218. If you went back about a year ago and you took a look at that number would be about 1,700, which means our rolling average, we're down about 500 transactions a month. And that's going to put us back into territory that for us is a lot more normal in the marketplace. We're going to look a lot like 2016 or 2019 rather than what we've looked like the past couple of years. So go up a little. And you can see it more graphically represented here. Obviously, we're off of total year to date. We're at 1,589 versus 2,236 last year, 2,043 and 21. Got to remember 2021 was kind of a record year, and it sort of picked up steam as we went further into the year. So roll it up just a tiny bit. Interestingly enough, you can see again here where we're off on the 5-year averages. So we're still kind of rolling a little bit. Go up. So here's the number that probably scares me a little bit more than anything else, and that's our pending number, because it's down year over year by about 200 units, and for year to date, it's off by about 400 units. So there's no question that the market is slowing down in terms of total number of unit activity. That at some point you would think would put a little bit of a damper on prices, but I'll show you why that's not necessarily the case. Go ahead and go up. So here's the number of new listings. We're off both year over year and we're off year to date. It is that lack of inventory that is continuing to hold the floor underneath prices. So if you're a seller and you thought, well, we missed the market, so we'll just forget about it and everything else, we need to have that conversation, because it's very likely that because there's less competition in the market for you, you're still going to be at an elevated price and you're going to be in a good equity position. So do not assume that the market has passed you by. Go ahead and go up. Let's talk a little bit about average days on the market, because this is an interesting thing that as a seller, you'll have to kind of get a little bit used to. Only in pockets are we going to see multiple offers within the first few minutes, and there are going to be some of those, but for the most part, days on the market increase significantly, both year to date and month over month. So what that means is just settle in for a normal marketing period. The frenzy is not going to be nearly as fast paced with interest rates where they are, but your buyer is still out there, and these numbers are still well below what we saw before the pandemic. Pre-pandemic, we were in the 47 and beyond marketing days. Go back to the last quote unquote crash, you're talking about months. So life is still good where we're at. Go ahead and go up. Wanted to talk a little bit about how it hits in a particular price range. So you can see 175 to 275,000 makes up the bulk of the Tulsa market. In fact, it's about 30% of all the properties. And our market time there was 30 days. So if you can live with your house being on the market on a month, you still got the opportunity to get a good sale price and keep going. As you go up in sale price, it tends to increase the number of days because there just aren't as many buyers available at this price point. Go ahead, call it. Wanted to show you this, and we were talking earlier about, hey, maybe it's still a really good time to sell. Prices continue to go up, both year over year and year to date. Why is that? That's because of the inventory number. So as a seller, if you are thinking about it, do not let your thoughts of the market passing me by stop you from having a conversation. Again, if we have a conversation and you decide to do nothing, not a big deal. Go ahead, go up. I think we're going all the way. Average list price to sell price ratio. What does this mean? So basically, this is how close to the asking price is a seller getting. 2022 in February, we were over 100%. Year to date, 2022, we were over 100%. Now we're at 98.63 and 98.25. So we're having to negotiate a little bit. So as a seller, you're not getting list price and over, but if you price your home correctly, you're still getting very close to that list price. So it's critical if you want to sell that we make the right strategy decision on your asking price to begin with. Go up a little bit. Wanted to show you where we're at in that 175 to 275 category. They're still getting over 100%. So that means if you're a buyer and you're in this price range, you're going to have to give a good competitive offer to be able to buy this house. And if you're a seller in here, you're still driving the bus as far as the market goes because it's still up. If it weren't over 100, that overall total number would have been down. As you can see, it's the only place where we're still up above. Go ahead and go all the way up. Talk about the summary just a little bit here and show it to you graphically. Inventory still down. Our month supply of inventory is down to less than 2 months. A balanced market is considered between 5 and 7 months. Anything below 5 months is a seller's market. So we are still heavily in seller's market territory. So if you are thinking about selling, do not let higher interest rates make you think that you don't have a good market out there. We are going to have to negotiate a little bit, and it's going to take us just a little bit longer. But the market moving back to normal. So it never costs you anything to have a conversation with me, and I never assume because we have a conversation that you've got to do anything. So if you're thinking about something and you want to make a real estate decision, give me a call.